trading up. Brent at over $114, just a little bit up, sort of been creeping up this week, sort of breaking away from that tight $10 range that we've seen in recent months, with the 1 to 110, 112, and now it seems to be moving higher. The question, I suppose, ultimately is have we broken out of that range? And that's something we've been discussing through the week. I suppose a little bit of context this morning, which makes this positive oil price even more spectacular in some regards, in that the Chinese Prime Minister, Premier as he's referred to, came out yesterday, or at least was published yesterday, giving a fairly stark warning headline to the Chinese economy that it was indeed facing very, very big challenges in comparable, if not greater than 2020. And yet what happens? Stock markets rise, oil prices go up. So thank Lord we have Dr. Carol Nachtley, CEO of Crystal Energy, on a Thursday morning to explain why gravity is going up and not down. Carol.
Good morning, Sean. It's great to be on the show again with you. I missed you dearly. Well, look, if you look at what we're happening today with oil markets, I mean, yes, I know we broke away from the $10 range that we saw quite predominantly throughout the months of April and most of March, I would say. But this was kind of expected for two reasons. Primarily, we haven't really, the war in Ukraine has not ended. Actually, on the contrary, it's getting more and more heated with additional measures and sanctions and, things imposed on Russia, and things are getting quite nasty with the fact that Russia's production may not keep up. And at the same time, we're heading closer to the holiday season, driving season, at least in the Western world. And at the same time, we have the announcement from China. I mean, everybody was looking at China because of their zero COVID policy. And everybody was wondering how long can the Chinese sustain that? Because for China, it's important to achieve certain economic growth. I know in their last 5-year plan, they stayed away from specifying a GDP growth target because that's when China was hit with the COVID-19 before everybody else. So they didn't want to commit. But achieving economic growth, certain level of economic growth, is important for China. And zero COVID policy is taking its toll on Chinese economic growth. And that's why we're all wondering how long it's going to be sustained. So put these factors together and you can understand the upward pressure on prices. So not much good news. I mean, good news in a sense that from a consumer's perspective to put downward pressure on prices. But how long this is going to be sustained, that depends on, more news coming in the coming months, particularly when it comes to economic growth, the economic outlook, which is increasingly gloomier with recession fear, though people are hoping that maybe inflation will come down by the end of the year. So at the moment, things are acting on the upward trend for prices, but I wouldn't rule out a reversal in the trend if we get gloomier macroeconomic data coming across in the coming months.
Let's welcome Ali Al-Riyami, a consultant and former Director General of Marketing at the Ministry of Energy and Minerals in Oman. Ali, despite the challenges that the Chinese economy is facing at the moment, they're not missing the opportunity to grab a hold of lots of cheap, discounted Russian oil, much greater than would be the normal amount that they would take into China, which of course is not only the destination of nearly all of Omani crude oil, but much of the oil moving out of the Gulf does see China as its biggest customer. What kind of threat over the medium term does this shift of Russian oil to Asia and to China present to the Middle East Gulf oil producers, do you think?
Well, good morning, Sean, and good morning to everybody. It's a threat, basically. I think, we have managed to sustain our position. When I'm talking about our position means, the producers from the GCC country. But I'm a bit worried about the big producers like Saudi Arabia, Iraq, Kuwait, UAE, that they will be facing a big challenge and also a competition basically to the same market. So far, we haven't seen that clearly. I think it started, to get, we have started to get impacted with that. But I think if this is going to continue for another 3-4 months, then I'm worried that maybe we will start seeing some prices, price war again, maybe a market share war, maybe in the future. But Russia will always push the oil to China and also to India, and huge discounts to these two countries, and we cannot compete with this prices with our economy here, and also cost of production in the region, and so on and so forth. So I think my worry is that for how long that the GCC countries or producers can continue surviving with this kind of situation. We know that maybe the Russian crude won't continue to be this much big volumes going to Asia. Maybe they will be affected, and less production will come from Russia. But nevertheless, I mean, we haven't seen this kind of phenomena before. So let's hope that this is not going to react differently than what it is now.
Let's welcome Rafiq Latta, Senior Correspondent of Energy Intelligence based out of Cyprus. Rafiq, one of the sort of big question marks on the market in recent weeks has been whether the EU would or wouldn't impose an oil embargo. I think as time goes on, it's sort of becoming irrelevant as the realities on the ground move beyond the debate. But your thoughts and outlook for that, with the EU due to announce their 6th round of sanctions on Monday, whether the EU oil embargo will be in it or not, and the ramifications either way?
I can't see a blanket one. I mean, we've seen a lot of kickback from the Italians, from Hungary, from Cyprus. I just don't really see it happening. I mean, I think it's been brought up before. Some of the more salient things are actually measures people can take against insurance, and that will, when that starts to bite in the summer, that will have an impact on how much Russian oil can go, or at a certain price. It's going to have to. It will cost more. It will be more effort, and that will certainly hit Russian crude exports. The insurance things probably more than or certainly as much as the collective effort so far. I mean, what we're seeing now in the EU, I'm by no means a European politics expert, but it does seem like a major rift in terms of its unity on this issue. And how it plays out is a little bit unknowable, but I think we can be fairly confident that the Hungaries and the Italians aren't going to completely fold on this. I just don't really see it happen.
Well, Rafiq, maybe without getting into the weeds of the geopolitics of it, the flow of it, we've already seen a sort of self-sanctioning move about 1 million barrels away from Europe. We now see the story overnight out of the US that there may be efforts there. It's not that long ago that the US, it actually was illegal to export crude oil out of the US. That changed less than 10 years ago. And there's now sort of murmurs, given the escalation of prices in the US, that the exports that are moving towards Europe may be curbed. The flow of this crude and gas, the impact that may have on prices if we start to see those structural limitations.
That's going to be seismic if they do reimpose an export ban. Things would have to get pretty desperate, but we're getting that territory certainly at the moment, and we're seeing disconnects and pressures at a state level and within. It's the hottest topic within, or one of the hottest topics within the US, and it's got wrapped up with all the culture wars. And we've seen states like Texas and Oklahoma passing legislation effectively outlawing investment in renewables, and so there's we're living in parallel universes within the US, and it does. such a move would certainly have a constituency of support. What it does for prices internationally, you can only think up, and I think the next few months, barring some sort of massive recession, demand collapse, it does seem like most of the drivers are bullish.
Carol, we saw also in the news overnight that the Fed minutes were published from the last meeting and indicated that the Fed was even looking at sort of more draconian rate hikes to tackle inflation, which ironically gave the markets confidence, the equity markets, because there was a narrative within the markets that the Fed had lost control or are very much behind the curve on controlling inflation. The idea that they're willing to be more robust is, in essence, flips the narrative a bit, makes them the markets more confident that inflation can be got under control. Where do you think we are in that sort of equation vis-a-vis the strategy for central bankers across the world, particularly in the OECD and the Fed?
I mean, look, the Fed's minutes did not, I wouldn't say that they caused a massive change in what we saw yesterday in equity markets because, mind you, these have been, first of all, they are for a past meeting. So I want to see what will happen at the next meeting. That would be better news to assess in terms of impact on stock markets. But also, it was kind of factored in already. I mean, the Fed's position is very clear that they are in trying to balance between taming inflation without really slowing down the economy. And at the same time, there seems to be, if you listen to officials from central banks in the OECD, there still seems to be like kind of hope. I don't want to say belief because they were proven wrong, for example, last year when they expected prices or inflation to ease down by the end of the year, and that did not happen. On the contrary, we saw inflation keeping roaring upward. But there seems to be a kind of, hope today that prices, that inflationary pressure are going to start to ease up maybe in the coming few months or towards the end of this year. And this takes me to the other point that Rafiq highlighted briefly, that is a demand impact. We seem to be focused largely on supply side discussion. And we forget that these high prices will have their toll on consumption, on households' income. Already we hear, for example, here in the UK where I'm sitting, there's lots of, almost every day, people talk about the huge impact that they are facing in terms of impact of high prices on their standard of living, on their ability to buy even basic foods to satisfy their basic needs. So that will at some point have an impact on demand, and demand is the main factor we should be looking at when assessing what could happen if there is an export ban in the US and prices increase. The story doesn't end with price increase. It's a dynamic market. We have to bring in the demand to the picture. But let me just add one more thing, Sean, on this export ban. If you notice what we are seeing today, and it's just an export ban discussion in the US, there is a protectionist movement growing around the world with food exports, for instance, in some Asian countries. And you can see that we are seeing not only a reversal in terms of vis-a-vis climate change or investment in oil and gas, but there is a major reversal for the globalization trend that has been around for decades, and now we seem to be doing a U-turn on that. And I don't know what that impact will have on global trade and on global economic growth.
Ali, meanwhile, the OPEC agreement, OPEC Plus agreement is moving quickly towards expiring in the end of the summer. And we've had the first noises this week, the Saudis indicating their desire to find a new framework for the OPEC Plus 20 plus countries. Your thoughts on the outlook for that? What could a new framework be built around? Obviously, the last time it was quite clear the oil demand was falling off a cliff. We needed to salvage the situation. The house was burning down. What is the context of a renewal of this when clearly, pump every barrel you can is the strategy at this stage?
Well, actually, I think this agreement was created to stay. So I don't think that we will see the end of this coalition between OPEC and OPEC Plus soon. And I think there will few weeks or few months from now, before the expire of the existing agreement, we will start seeing some indications of new terms and conditions on especially on the export and also from the production side and so on and so on. Depends about the market and depends about the supply and demand for the coming 3-4 months. But again, I mean, I have no doubt, I think that majority of members of OPEC and OPEC Plus that they want this agreement to continue. Maybe there will be a tuning here and there, but majority of countries, they are willing to stay and willing to continue. The reason
what would it go ahead?
No, the reason for them is that they have seen the fruits of this agreement for the past 3-4 years, and if it is working, why should I look for something else? So I think Oman in particular, that there are I think there are indications already have been sent to different countries in the region that we are ready to support, we are ready to be members, and so on and so on. So I think the rest will follow.
I suppose the challenge is that, Rafiq, and I'll put this to you to think about, is that in order to find a new agreement or a reason for a new agreement, it seems you have to acknowledge the misalignment on quotas versus production. And in order to have a new agreement, you've got to have some sort of context. Well, what's your quota? And you've got countries who are getting quotas that are way beyond their reality. I'm just wondering, how big a problem do you think that could be, Rafiq, in order for this group to find another consensus? As I said, it was quite clear at the beginning, the house is burning down. Now, everybody's drunk on $100 oil. What's the problem? What can you agree around? What's the purpose?
Yeah, I think they're going to make it work. Yeah, there's a loss of credibility. They have, these quotas have zero credibility at the moment. I mean, we make April production like some 2.7 million barrels a day under target, and I can't see it getting better. So that does need to be resolved. I don't see it as big of an obstacle as some others do. I think Saudi Arabia can turn around and say, we've got to do this. It's quite clear we're out of whack. Let's do it. And if prices are still high, I don't necessarily think they have to go with individual quotas. Credibility of individual quotas matter a lot less when the revenues are good. It's only when you get a downturn, when you've got to pull together, when you need to signal that transparency and that accountability, that you need the individual quotas. They for years just have the group ceiling, and I don't necessarily see that. They could bring that back. You have these regular monthly meetings, and so they're in a position to respond quite quickly to any U-turn or change in the market. I think they'll get it together. And another point that I don't think has been fully appreciated is that with this slippage of capacity, it's quite clear, OPEC Plus does not have the market share it did like 2.5-3 years ago. Now, that's a problem for influencing the market, true, but it's a great spur or incentive towards cohesion. I think if you're a smaller member, if you're experiencing capacity challenges, you're not going to be pushing to leave OPEC Plus and produce more. You're going to want to be in this group. So I think, there's some downside about the loss of capacity, true, but they all are also some upsides. And I think, as Sayyid Ali pointed out, the effectiveness of that COVID response is a great message. Let's not forget that in, I think, April 22nd, I can't remember, April 2020, that OPEC basket price hit $12.20. $12.20. Okay, it was only a day or so it was that low, but that's a great, pain is a great teacher. And I think a lot of those countries are still going to remember that, and they're going to do everything possible not to undermine the mechanism that effectively saved them for that position. Yeah.
Let's go to the survey question this morning and give everybody a chance to give their view on the thesis that I presented earlier. China sent out serious warnings on its economic growth yesterday, and oil prices still rising today. The reality is there is nothing on the demand destruction horizon to stop oil prices moving up towards 120 and beyond over the summer. That even with China sending out flares of warning of economic stagnation, markets are still rising. And so demand destruction, it may come at some point over the horizon, but it ain't coming over the summer as everybody in America gets in their car and drives to see their grandmothers. Agree or disagree on that? Carol, the question that might be again emerging, as was mentioned earlier, is the fractures in the alliances that we've seen in support of the European position vis-a-vis the Ukraine war. We've had overnight the Italians and the Hungarians, I think, calling for some kind of settlement. We've had Zelensky saying, go to hell, I'm fighting till the death here. But point is that fractures are starting to emerge. I wonder how that, do you think, will be how it could impact the economic outlook, the market outlook?
I mean, look, with the EU, fractures, I mean, were expected and are still expected to persist because it's a very diverse group of countries, not only in terms of their dependence on Russian oil and gas, but their historical, political, and economic ties to Russia. But if we put that aside, you also have to think about the economic toll that you are already having on these economies across the EU. The refugee problem, it's perhaps the biggest humanitarian crisis in Europe since World War II. So that by itself is having major impact on Europe. And the longer it lasts, the worse the situation is going to become. So I can understand why some countries, particularly Italy, with its historical good ties with Russia, and Hungary in particular, because remember, they were the one opposing the oil embargo. And of course, they want to get something in return if they were to support that. But we can understand where they are coming from. Of course, you have the moral, heroic position of President Zelensky, and we salute all his effort. But there's also the harsh reality of other countries, which at the beginning took a very strong stance against Russia, but today they are feeling the impact more and more on their people and on their economies. And this is a problem with wars. The longer they last, the more we're going to feel, some shift in positions, because people become itchy and impatient for these wars to end, because they feel the burden in their own country for something that is happening elsewhere. Unfortunately, this is the reality. It's not about principles or moral, and we should expect also maybe other countries in Europe to take the side of Italy and Hungary and call for a ceasefire, achieving peace to a certain time, and then put an end to this humanitarian and economic crisis.
Ali, the situation in the Middle East vis-a-vis the Iran talks and the sort of stability in the region, which one would have to say has felt fairly positive in recent times, obviously, particularly with the context of Yemen still being silent. But we've had some dramatic, I think, potentially dramatic developments overnight. The Americans have declared, or at least the chief negotiator on the JCPOA has sort of declared to Congress that the revival of the nuclear talks looks very unlikely. We've had the assassination earlier in the week of the senior Iranian military person, and then overnight an acknowledgement from Israel that they did the assassination. I'm wondering from your thoughts how all of these pieces could go together to disrupt the outlook for the region at the moment. What are your thoughts?
Well, it's a very difficult situation that we are in at the moment. GCC countries and also Iran and Middle East in particular. So today you hear bad news. Tomorrow we hear good news. Today we hear this visit of Raisi to Oman. Tomorrow we see some prime minister and other ministers going to Saudi Arabia, and so on and so forth. So there is this kind of a limbo. One day up, 2 days down, and we will, I think, continue seeing this kind of situation for the coming few months. It doesn't look good. The nuclear deal, it's not doing very well. It's not like it's not like what it used to be 3 or 4 months ago when everything was ready and so on. Everybody was happy. But at the moment, things went dramatically down, and we are waiting to see any kind of input and support from different countries now to relieve the situation again. But nevertheless, I think these visits officials from Iran to neighboring countries, it gives us a hope that there are something to do at least with the Yemen crisis, let alone the 5+1 or the nuclear deal. But at least we want to see some stabilities in the region. Let's just focus on Yemen, and I think the Yemen situation now is getting a little bit better. Talks have been, exchanged between the countries. Oman is playing a good role, Qatar, and everybody trying to help and to bring down the situation to where people can sit on the table and discuss and also agree on the deal. So this is a good news. At least we have something to talk about. But the rest
there's also
very gloomy.
Ali, there's the positive signs, I suppose, that Joe Biden, the president of the United States, is now planning a visit to Riyadh, to Saudi Arabia. How do you see that vis-a-vis all of these other issues?
I should ask you, do you see this as a good or bad situation? I think it's good. I mean, everything.
Well, talking is good, right? The opposite is not, one would have to say, ultimately.
Yeah, but I think any movement, any kind of political position and political talks between the countries, we know that there was a gap between the USA and also USA and Saudi Arabia. So to bring these two powers or two good friends together and talk about the issues in the region, and also to try and come up with solutions. So this is good. I mean, we always encourage dialogues. We encourage visiting each other and to lay down the foundation of talks and also agreements in the future. So it's all good. It's all positive. Let's hope that the results of this visit is going to be a tangible one.
Yeah, well, certainly we saw the triumvirate of the leaders of the US, Russia, and Saudi Arabia being so instrumental at the start of this OPEC plus agreement in April 2020. They sort of cooked it together, if you like. Now I wonder if how those three fit in the kitchen as this agreement comes up for renewal. I wonder what that conversation, we'll have to watch and see. Let's give Rafiq the last word this morning with the survey results coming in. Rafiq, I wanted to get your views on we didn't touch on yet, the challenges in the middle distillates, diesel, jet fuel, and so forth. There's some fairly dramatic statistics coming out of the East Coast of the US that diesel is at near record lows. How do you see that playing out, which has been one of the reasons the oil markets are quite supported at the moment? Refinery capacity restrictions.
Yeah, so if I could just take up very quickly the geopolitical in the Middle East. So yeah, the Yemen truce ends on June the 2nd, but it looks like it's going to be extended, and that is a very big positive. I agree with Said Ali. I would highlight, and it's not unconnected with the rising tensions between Israel and Iran, the potential for the Israel-Palestine and Israel-Lebanon front to ambush the market. And we're seeing recently quite a lot of killings on the Israel-Palestine side, and we're seeing essentially, it's not so much the killings, it's the fact that the funerals afterwards have been attacked too. So I don't think the Israelis are in de-escalation mode, certainly. And in Q3, we're going to have Energean starting to start up its Karish field, which is in waters which certainly some elements, such as Hezbollah in Lebanon, feel are Lebanese waters and have threatened that project. So we could well see something in the next few months sort of surprise us on that front. To get back to the distillate question, yeah, and it's not just the US. I mean, UK stocks are low. This seems to be a big problem globally. I mean, basically, the world has failed to. We say every one of these podcasts, the world has failed to invest. And the failure to invest for very good reasons, because it's longer term and the margins are historically less good. And
it was been massively discouraged by the energy transition, right? The balance between energy security and energy transition has been out of whack.
So yeah, I believe there's been a lot of maintenance, and that'll be coming back. But basically, we have a structural problem, and the difference between crude and products is going to go bigger, maybe not as much as it is now, but you know, certainly as compared to historical levels, and without some very clever and clear messaging and changes on the policy front, this situation is not going to go away.
Well, it's interesting in some regards, as we wrap that up, that China are resisting the opportunity to export more products and are keeping a very tight control on their teapot refineries, who are classically more unaligned, let's say, with the protocols of lower carbon or more efficient production. And it does seem the Chinese, at least, are sticking to their carbon targets and keeping the refineries, or at least the independent teapot refineries, under control and not allowing them to export more products, which is adding to the tightness. We must wrap it up there. The end of the Middle East week, the end of our podcast this Thursday morning, with oil prices on Brent at least solidly above $114 a barrel, for all of the reasons that were explained. And thankfully, we had such an amazing group of analysts with us today. Dr. Carol, as always, Thursday morning, thank you so much. Ali Al-Rayami, off to Zanzibar soon, I hope. And Rafiq Lata, thank you so much for your insights. Really appreciate it. Have a great weekend, everybody. Sunday morning, 10:30. We'll see you then. All the best.
Thank you. Bye-bye.